Now, let's kick off Corporate Radar. We've got Rakesh Sharma, Executive Director at Bajaj Auto, who's joining us as the new GST regime gets underway. Thank you very much for joining in. And some of the top discussion points today are, one, the GST cut on bikes below 350cc, automakers passing on the GST benefits, and plus update on inquiries after the GST cuts. Thank you very much for joining in. First, on an average, can you tell us the reduction in prices on account of GST for Bajaj Auto, and over and above that, are there discounts, and how are the inquiries looking?
Good morning. Yes, it's a very important day today, as there's a lot of expectation in the market. The news has penetrated right across India, from the urban and off late even in the rural areas. And there has been, in the last 1 week, a very healthy uptick for inquiries. And most people, particularly in the festive states, wait for the Navratris to begin so that they can take deliveries in the auspicious period. We have passed on, obviously, the entire GST reform and the entire GST cut. So in motorcycles, it ranges from, depending on the bike, from rupees 5,000 per unit to about 20,000. And three-wheelers too, we've passed on the entire GST benefit, which amounts to almost 28,000 rupees. We've gone further. There was an expectation that this little distortion which is there on the above 350cc bikes would get evened out, but when the announcement came, the 350cc's are being taxed at a higher rate. So we've gone further and we have maintained our prices of the 350cc plus range, just so that the consumer in the festive period doesn't see at least a disruption over there. In addition, as part of the festive spirit, we've made it attractive, particularly for those people who are going to take finance. And we believe that this cut should see better penetration of financing. So there is a little bit of schemes on processing fees, etc., for customers who are going to be taking finance. So they will see an attractive offer over there. So all that combines to give a really healthy, 20,000 rupees saving for an average 150cc type of motorcycle.
Okay. And over and above the GST, the cut in prices on account of GST pass-through, are you giving any festive discounts?
Well, no discounts, like I just mentioned.
There are incentives if you take, for financing of the bike.
Yeah.
That is there. But other than that, no discounts?
No. There's no discount on the bike. I think there is a very healthy discount which the government has handed over to the customer. So I think that...
Mr. Sharma, how are the inquiries? Can you give us some numbers?
Well, it's very, very premature to give you numbers of inquiries, and I don't know how relevant that would be. But I can say that there have been a lot of calls and a lot of the visits. I would say that in terms of people calling, people visiting, there is a marked uptick in the last 1 week, gone up by 20-25%. So there is a lot of interest in the potential customers.
All right. Hi, Mr. Sharma. Morning and good to see you, Ben. So on a like-to-like basis, festival to festival season, what kind of numbers are you working with? Two-wheeler, motorcycles, as well as if you tell us in terms of EV. What is the rough growth you're looking at? Y'all are giving discounts. The government has given the set of discounts as well. So it should be very buoyant times, right? What is your estimate?
I think it should be buoyant times. I think most importantly, it will reverse the declining trend which the industry was facing. I mean, we just step back. FY25 ended at 6% growth. It started very well, did well in the festive, but Q3, Q4 of last financial year were negatives. Q1 was a negative, and year to date, that is April to August, the motorcycle industry was at -1%. And we were all expecting it to be around, between 3 to 5% plus. So I think that this reform is going to be quite a quite an inflection point, because it hopefully will reverse the negative year-to-date trend into a positive one as we go forward, not just in the season, but hopefully beyond the festive season in Q4 as well. Because some of the growth inhibitors which we were seeing in the last few months, which were around inflation, particularly rental inflation, and the reduction of disposable surplus, and the uncertainty around inflation, those forces will get mitigated. I think the customer sentiment will become much more positive when they see so many categories, the prices coming down. And that was a key reason. The financing companies were a little bit cautious. With disposable incomes going up, inflation coming down, I think they will feel a little bit better about risk assessment, and finance penetration should improve. So when you put this together, I think this will be quite a pivotal in reversing a negative trend into a positive one. But having said that, I was doing some maths, and we will still be below FY 18-19 in the industry. So there is some, FY 18-19 was the peak, and it will be a touch and go. But hopefully, let's see, fingers crossed, that we can cross the FY 18-19 peak by the time we close the year in March 26.
Mr. Sharma, hi, morning. Prashant here. Could you tell us, because your export proportion is also quite significant relative to other players, in the domestic two-wheeler segment, what's the sort of proportion of your sales which comes from the local market? And second, April to August this year, FY26, compared to those same months last year, there seems to be a bit of drop in market share for you, about roughly 90-100 basis points or so. I just want to go back to the point that Rima asked about other incentives, etc. What else could you do to, regain market share here? And if there are any specific reasons for this, is it intensifying competition in this segment? Go on, sir.
Well, to knock off your first question, the international business on volume terms is about 40-45%. Of course, during the festive, the domestic picks up. But over the year, the volumes are 40-45%. In value terms, it is about 45%. That's our share of our international business in the Bajaj Auto portfolio. Yes, from about 6 months or 9 months ago, we did start to see in certain segments a loss of market share. And a large part of that, I think, is competitive activity in terms of new product introductions by competition. And these have to be responded to. So that's very much in the cards, in the pipeline. Over the next few quarters, there will be a response on our strategic segment, which is the 125cc plus segment, with an array of new products coming in. I mean, if I rewind about 3 years back, we had the first mover advantage in terms of introducing new products into the freshly developing segment, which was the 125cc segment. So we raced ahead, and those products need refreshment. They need some more innovation, and that's about it. And that's what we are right now preparing for, and the next quarters should see that. I think that's the fundamental response, and all the other tactical stuff, of course, will accompany this fundamental action.
Okay. Sir, I think when, about a month back prior to this GST announcement, you had spoken about industry growth of 5 to 6%. Is that correct for domestic two-wheelers led by 125cc? Was
yes,
that your...
That's right. That's what
so how will that number change now with this GST bonanza and an uptick in volumes?
So that's what I was saying in the beginning, that when the year started, all of us were expecting around 5 to 6% growth. Correct. Because FY25 had closed at 6%, but slightly unexpectedly, for reasons of inflation, caution in the financing segment, we found that the industry actually degrew. And that is exactly what I said. But because of this change, the substantial benefit which the government has passed on to the customer, both in terms of both quantitatively and qualitatively, I think it will push the industry to reverse the negative trend
Sure.
and get a positive zone.
So 5 to 6% industry growth guidance stays now.
Hopefully, it should get back. There is no reason for the industry to now not at least go back to the last year's growth rate.
Got that. Thank you very much, sir, for joining in. We